This is Tom Alexander. It is around midday in beautiful Charleston, South Carolina. It is Sunday, August 15th, and we're going to go through a review of the stock indices today. And I'm basically going to expound on the information that you have in your report. So let's stop me and share the screen here. So we're going to start with the bar chart here of the four primary U.S. trading indices. These are the cash markets I'm going to show this week. Sometimes I'll show the futures, sometimes I'll show the cash. I think the cash is really a better marker because it eliminates some of the noise that you get in the futures contracts, and sometimes you'll get outlying extremes up or down in those contracts. And the cash market is really more the dog that wags the tail rather than vice versa. So there are a few things to note about this chart, and I mentioned that in the report. First of all, the indices on Friday, it just had maybe one of the more bizarre closes that we've seen, and that's saying a lot because we've seen some really bizarre closes. And in particular, what I'm referring to, you had the S&P close almost on its high. You had the NDX not too far behind, but still below its all-time high. You had the Dow that is normally very highly correlated with the S&P close in the lower third of its range. And then you had the Russell close on its low. So these things are all over the place. Now, when you get this consistently disparate activity among the indices, this is something that you will see when markets are forming long-term changes in trend. Now, you can also get false signals here, but this is just sort of background information. There's no imminent signal here to buy or sell any of the indices, making note of that information in itself. But you're not going to have the S&P and the NDX going straight up with the Dow not or the Russell sitting on its low. So as we come into Globex on Sunday evening and trading for cash trading for the week, something is going to have to give here. And it seems like I say this almost every single day, and then we get some other oddity. So I think the best advice I can give you is to take the index that you trade and trade that one and pay attention to the key reference areas of that index. That will keep you out of trouble. That and the other techniques that we use in the live trade room if you're a real short-term trader. If you are a swing trader, position trader, then pick your index and trade that index. Right now, and it's not particularly useful other than just making note of the disparities among the indices and various divergences. And we're going to talk about more divergences in a few minutes regarding market internals. But for now, the best advice I can give is to take the index that you prefer to trade and honor the levels, the auction market levels of that particular index. So let's take a look now at the profile view of the indices, and we'll run through those one by one. Well, I landed on the Russell here, so let's just talk about it for a minute. This is a giant balance area. This entire area here is one giant balance area. And the high volume node of that balance area is this sort of pinkish reddish rectangle. And then this is the August auction right here. And you can see where we closed on Friday. So we're close to the midpoint of the August range, which is also nestled securely at the high volume node of a larger degree structure. Your immediate key reference areas to the upside here around 265 250 to the downside, and then 2203, 2188. I mean, to the upside, and then to the downside, 2203, 2188. The Russell could be the key to the next significant trend. It's just fascinating to watch the Russell develop. This, when the Russell does decide to trend, when it does decide to have that initiative move, that's one that you want to be watching and you want to catch, because it's going to be quite a move. All right, let's take a look at the S&P. Where's my cash chart? Here we go. And what we have here is a market that has been in vertical development really since early August. We had a little bit of a blip in here, a little bit of two-sided trade, but from the August low into Friday's high, you basically have a distribution range forming. And a distribution range is just that. It is a range. It's relatively undeveloped, meaning there has not been a whole lot of development in it. Now, and this is the big difference between being an auction market trader and a market profile trader. The market profile people are going to look at this and they say, oh, well, here's the August auction, and then they're going to give you all the typical market profile speak regarding this particular structure, but you can't chronologically restrict the auction. You have to use the profile graph to help you determine market condition in the auction process. It's not vice versa, which is where the market profile crowd gets it wrong. So we're in vertical development off of this low. Now we can go a lot higher, who knows? But the higher you go, the more likely that you're going to get more two-sided trade than we've seen in a while. We shall see. These are the immediate downside key reference areas. There is nothing above present levels. You'll have also the predicting crowd that uses all sorts of fib stuff and Elliott wave stuff and Gann stuff and trend lines to give you all sorts of predictions to the upside. Well, that's out of my depth. Somebody will be right. It's just never the same person twice, using the same technique twice. As it stands, the migration of value in this index is higher. The concern will be if we close below 44.36. That will be a sign, that will be the initial objective signal that some top of relative significance is in place. All right, let's go look at the NDX. And the NDX is in a very two-sided trade. We've had quite a two-day bungee jump, but we're still not, or the index is not able to close in the new all-time highs. Now, if the NDX begins to pick up some upside momentum, that would bode well for continuation of the SPX to the upside. The initial signal of some concern in the NDX now is a trade below Friday's session low. Certainly, this lower key reference area is now critical to the intermediate term development of the NDX. All right, let's go look at the Dow. And the Dow has a very similar intermediate to long-term view structure, as does the S&P, which is what you would expect. Friday's close notwithstanding, which was very odd because we had the S&P closing near the high, we have the Dow closing near the low. Obviously, the Dow is 30 stocks, S&P is 500 stocks, so there were a couple of components in the Dow that were weak. But again, you're not going to have strong trends in the S&P with the Dow trading in the other direction and vice versa. So that's where we are as we come into Monday as far as these indices are concerned. Now, another piece of the puzzle that we watch that becomes increasingly interesting, and I've been showing this show this every week, actually. If you want to know what these little highlights are, go back and look at previous reports. I discussed that. I'm not going to go through that here. What I want to point out here are the divergences that continue to mount in the 10-day and the 5-day moving averages of NYSE advancing issues. Now, breadth is a blunt instrument. When you're analyzing the market, you have to be careful, especially when the market is in a bull trend, with divergences, because this can resolve itself, excuse me, in a bullish manner. But it is at a point as we come into Monday where shorter term, you're going to have to see another expansion in breadth that pushes out any potential top at least days, or we're on the cusp of some sort of retracement 1-2% plus. And as I put in the report, the downside level to really keep an eye on is this 436 level, because they're two lows. And this gets back to what I have said, pointed out in the past. The general guideline when the market is trending, in this particular instance is trending up, is that the previous day or the second day back extreme should not be taken out. Well, in this particular instance, the previous day and the second day back low was around 44.36. That's why I chose 44.36. Not to mention the fact that Thursday was a wide range up day with a lot of conviction in it, which typically bodes well for short-term momentum, and it takes several days at least for that momentum to wear off. So we're coming into Globex on Sunday evening with a mixed bag. It will be interesting to see what clues Globex gives us, and Globex will give us some clues, which I will address in the pre-market report for members. I hope you found this helpful. If you found it helpful, like it and subscribe to the channel. If you're interested in membership, there's information about that in the report. You guys have a wonderful rest of your weekend, and I'll be speaking with you soon.